All right, hey there. Good afternoon, everybody. Chris Franks with Texas West Capital. It's just a few minutes after 11 a.m. Central Standard Time here on the day after my birthday, November 19th, 2021, and an absolutely beautiful day here in Bernie, Texas. Hopefully, you guys are doing all right. Hopefully, you picked up on that Bitcoin rally overnight or Litecoin rally yesterday, end of the day there. A lot going on there, the dollar rally, all that kind of stuff happening. Here we are, guys, coming into the end of the year. The market's stuttering a bit. Nothing's finished off yet. We've got Waller over there at the Fed saying, "Hey, listen, we probably need to step up the taper to get done sooner. And if we step it up in January, then we'll probably be done by April." Again, nothing I haven't said already, but some over there in the Fed kind of starting to talk about it now, right? So, here we go. We'll see how the rest of this year turns out. I think what is it? We're almost the end of November here, so the next 7-8 months maybe really going to be kind of pivotal, I think, for everything, just depending on how quickly or slowly it doesn't finish up here. So who's here already? Let's see. We've got Devin checking in. What's up? Oscar's here. Daniel Mendez. Good morning, sir. Claudio is checking in already. Who else is here? Hunter. Let's see. Nevlusian. Keith. Crypto Mowgli. Let me see here. Mark's going to have to be out in 30 minutes. That's all right, Mark. Always good seeing you check in, man. Dana's here. What is happening? Says happy birthday. I appreciate it. Yeah, guys. Thank y'all. Everybody happy. It was a good day. I did a lot of work. I worked a lot more than I intended to yesterday. But overall, turned out well. Let me see here. Indian Valorant Gamers, good to see you. Let me see here. Jeff D checking in. Wind here's as well. Let me see what is happening coming in from Charlotte, North Carolina. Oh, man, good times. Good to see you here. I definitely appreciate you guys, man. Thank you for the happy birthday wishes. Man, it's been a good, it's been a good week. It's been a good year, really. Oh, heck. I mean, for most of us, just paying a little bit of attention, it is, right? It's hard to be too wrong, too much wrong there in a bull market. The key, guys, I keep telling you with trading, the key is just to make sure that that you're using good risk management, that you're looking for the higher confidence trades, that you're not entering before confirmations. If you can do these things, guys, these things are so simple to do. Well, in theory, you have to get over your emotion, right? But if you can do them, man, it sets you up to have a much easier time trading, a much more potentially profitable time trading. It's when you deviate from these things, when you don't use proper risk management, when you don't wait for confirmations, when you don't do those things, that's what makes trading difficult, guys. Most of y'all, people in general can figure out which way the trend is going. They just get in too heavy, or again, they don't wait for confirmations. And so they get in and then it pulls back and either they get scared and jump out or they're using too big a size. So it knocks them out before it takes off, right? I'm sure you guys have been through that multiple times. I know I was at first. But it really is. Trading is just a game of getting over your emotions. That's really what it is. Your proclivities to have things today, to not be patient. If you can just work through that, guys, it makes life so much easier as a trader. But if that was easy to do, then everybody'd be doing great at trading, right? Let me see here. Bill, what's going on? I see you there. Ali is here. Let me see. Man, you guys are just awesome. I really appreciate you guys. Leighton, what's up, man? Checking in from the UK. Ricky Bobby. Oh, man. Funny movie, man. I'm a big Will Ferrell fan, so I love the name there. Maddie checking in here. Ventru is here as well. Boris, what's up, man? Anyway, guys, hey, listen. So today's the last day you can get your quarterly access to our Tier 3, to get a quarterly Tier 3 membership, I guess what I'm trying to say here. Or add to whatever time you have by purchasing it. Let me see. Let me go ahead and pull this up over here for you guys so you can see it here. There we go. So you just got to go right over to the head, to howtotradetowin.com. Choose the quarterly Tier 3 membership subscription. Use this code. It wasn't working for a bit. You know what, guys? Here's what I'm going to do. I'll tell you what. It wasn't working for a bit at the beginning. There was an issue with the code. And so we missed a few days of using that. So I'll tell you what. I'm going to go ahead and extend this till Monday. Till end of day Monday. So you've got through the weekend to get a hold of this. But go ahead and use that code right there for it. Code. We'll put it right there. And that way you guys can jump in there and do it since it wasn't working there at the beginning. But I did get it working. It should be working now. If you have any issues with it at all, just go ahead and send me a message. Let me know so I can get it figured out there. Technology, sadly, is still just a pain in the rear end, right? But anyway, we'd love to have you in there. So, we already discount if you're getting multiple months, in front. You don't pay the normal month-to-month rate. And then on top of that, we're giving you extra 25% off on that. So, pretty big discount there. Works for everybody. Legacy members, regular members, new members, everybody. So be sure to take advantage of it. We did have the drawing today. And so here's what I'm going to do. So I told you all last week what happened. I got scammed there. $100. So what I'm doing this week is I'm going to draw for the $250 for sharing the last week's drawing thing. Let me see. Where is it? Right over here. Let's see. Let me see. Sorry, I'll find it real quick here. So, when we did this, gosh, dog it, where is it? Somewhere down here. I ain't trying to find, trying to roll through all this and trying to figure it all out. But anyway, we had the tweet there, that you could win, our drawing there, right? Which is the $1,000 in Bitcoin and whatnot. And so that's over with now. So we'll show you that in a minute. But I had the other giveaway, the separate giveaway for $250 of Bitcoin that if you, retweeted it and you liked it and you followed us, then you'd be entered in it. So what I'm going to do is I'm going to draw from that and then I'm going to contact that person on Twitter. Okay, guys? So if you've entered that, make sure that you check your Twitter messages, all right? Your DMs there. You're going to have, as usual, 7 days to get back to me and let me know, okay? If you don't do it in that 7 days from the moment that I send you that message, you lose it, guys, okay? So you're going to have to pay attention. But that way, and then once they claim that, then I'll go ahead and post who won, and then that way I don't have to worry about some idiot coming on there trying to take your money from you guys, okay? The other thing, we did have the giveaway today that just ended. Let me see here. Let me log in. I'm going to do this real quick while I'm here, guys. Give me just 1 minute here. I got to log in here real quick. And then I'll hit the drawing thing, and then it'll tell you, let's see, ready to be awarded. Man, you guys had a great chance this week. We only had 579 entries. So, we're giving away more this week, $1,000 in Bitcoin, guys, and we had less entrants than we had over the last two giveaways. Absolutely crazy, but whatever. You guys who entered, you got a better chance of winning. Let me see here. And so let me go ahead and do this here. And all right, so what I'm going to do, I'll show you this. It just shows you the very beginning of the email address. I will email you. You have 7 days from today when I email you to get back to me, all right, to claim your prize. If you do not get back to me within that 7 days, guys, as I mentioned, at the beginning of the whole giveaway there, it was in the rules there, then you forfeited, okay? None of this coming in the next day and going, oh, I forgot or I didn't check. You guys knew. I told you that's the way it was going to be. That's the way it was, all right? So here we go. Here is the winners. Sad. That was sad. Okay. So this individual right here wins the $1,000 in Bitcoin. There's the beginning of their email address. This person right here wins the PS5. And like I said, if they're the U.S. Resident and they don't want the PS5, but they want the 6 months of Tier 3 access, we're going to do that instead. If they're from out of the country, if they're not a U.S. citizen, then they're going to get the 6 months anyway because, again, the systems don't work outside the U.S., so it is what it is. This person right here starts with KMP, won the annual Tier 3 membership, and then this person right here, KMP, won the 6 month one right there, and then SAH there won the 1 year membership, okay? So $1,000 in Bitcoin, PS5, or 6 months there. 6 months here, and then 1 year here, the winners. So I will send those emails out to these 4 people today. Like I said, you guys have 7 days then to get back to me and claim your prize. If you don't, well, then you lose it. As far as the other person goes, like I said, I will do the drawing here after I'm done here today. I'll send a DM to the person who won the $250 for sharing the tweet. And then once they claim that, or once they, get back with me on that, then I'll go ahead and post who won. And that way, like I said, no scammers coming in and trying to take y'all's money from them. Okay? All right. Let's see here. Hey, what's going on, Brian Riley? Good to see you. Droid Doctor is here as well. Blaze is here. Richie LaBamba. Aramis. Who else has showed up over here today? Man, I love it, man. Everybody was showing up. Mauricio, what's going on? I always mess up this one. Gomates? It says, don't get it back in 7 days. He said it to me. Anyway, hey, man, glad to have you all here and checking it as always here. Let me see here. What else do we have going on? By the way, you can do all that at howtotradetowin.com. There we are. Just go on there. Go up to the join us up there and then go to tier 3 and then whatever you want to get on that. And you'll be able to do that, right? Let me see here. I apologize for missing, I usually do a quarterly podcast here with Forex Analytics there with Dale. Had some family stuff here that happened, so I wasn't able to make it. I'll be back, though, in about, I think in March. So we'll be there again. Usually do this quarterly. Dale's a great guy, man. You guys should check this out. Listen in on it. They got some pretty good stuff going on in there. I don't always agree, but, I rarely agree with with most people, right? But really, Dale's a great guy, man. A lot of experience in the markets and whatnot. It's a great host, so good times. Let me see here. Was there something here? I think there was something here. Let's see. Oh, yeah, don't forget, you have this right here you can still do. Let's see. Let me copy that link there. This is from Elliott Wave International. I usually post their stuff, guys, when they've got it. There's very few other services that I support, that I believe in, that whatnot. That's one of them. Again, they are the preeminent Elliott Wave company out there, right? And so it doesn't mean that I always agree with them. I don't. Again, sometimes I'm wrong, sometimes they're right, sometimes they're wrong, sometimes I'm right. It is what it is. But overall, I mean, it's if you have to spend your money elsewhere other than with me, with TWC, that's another place, a good place to have it in there as well. Robert Prechter, has his hands in a lot of that because it's his company. And he's got quite a track record here, guys. But anyway, so yeah, you can check that out right there. Let me see here. What else do we have? Let me see here. This right here. I think people would see. I always get iffy about posting things. So like I posted this here. And all I posted was, hey, it's been up over $1,000 last 15 minutes. Did you go long? And I think people assume that I'm saying, okay, that's definitely the bottom. That's it. No, if you're in Discord with me, we have a certain level higher that we were looking to get above that we didn't. And so it went down further. So we had no entry on that. But I was just curious to see if anybody went long on that. But, again, doing what I do, people are going to just assume that means, hey, you said that's the bottom or whatever. And of course, never said that, right? All I asked is, did you long it? So make sure you guys understand that, if you follow me long enough, you'll understand that I'm never a definitive guy. Like it's definitely doing this or that. There's always validation levels and invalidation levels and confirmation levels that I'm looking at. So make sure you guys understand that, all right? Let me see here. I did post this, though. This was a good one. So Litecoin takeoff, we'll take a look at this chart here as well in a bit. So that was that swing low down there. And then we had that rally off. And it pulled back near the swing low. Didn't break down, though, and has continued up since. So I think that one's looking pretty good at the moment here. Got a longer-term look on that right there. Let me see here. I guess that'll do it probably for right there. So anyway, that's kind of where we are right there with all that. Let me pull in. Where's Bitcoin? Is that the one I'm looking for? There we go. That's what I'm looking for. Hey there, Silvio. Good to see you. Jose checking in. What's up, man? Carlos is here. Good to see you guys. Bill says, "How to Get a Grip on the Chaos of History" sounds like the title for his biography. Oh, man. Let me see here. Hank's got Twitter issues? Wait, what? Did I miss something? Oh, man. Anyway, so here's what we were looking at. So what I was talking about, again, I posted this, right? And I believe it was this right here. And I was talking about how it rallied up there, and if you got it right. Now, if you look at here, this is our level up here. That's our confirmation. This wave 4 is our confirmation. So until it breaks out about there, it's still possible it could drop down, right? And of course, then it did there. So what am I looking at here? Well, locally, I think wave 2 may be complete. If I zoom out here a bit, we kind of settled on this idea. You know, we were looking at a couple of things that maybe we've got an A and a B as a, flat correction. And then 5 waves down for wave C here. And so that gets us a 1, 2, 3, 4 as a triangle, and then 5 as an ending diagonal. Specifically as an ending broadening wedge, I guess. That's probably what we're looking at on that. And so, you know, again, the big, where you're looking for it to get above, if this count is correct, then getting above wave 4 signals that, okay, that bottom may actually be in. Because once you get above wave 4, wave 5 cannot subdivide any lower, right? So it locks it in and it's done as wave 5, right? So you look for that wave 4. So you're really looking for a breakout above 59,975 and 20 cents here on Coinbase to kind of signal. That's your first big clue that, okay, the bottom may be in, okay? Now, locally, what I told Discord last night, in the update, and I did a lot of updates yesterday, just kind of getting them to understand what I was looking for as we were, printing, as price action was printing here, right? But basically it came down to, we were looking for a breakout above this descending wedge resistance here. And then that would be kind of your first clue. That gives you a pattern target here based on the height of 59,220 or so. And so that's kind of what we're looking for. That's our first warning, maybe, our first warning that the bottom may be in is the breakout here. We'll look to reach this target. If we can do that, that starts adding a little bit of confidence locally. Still got to get above that wave 4 there. Now, if we're zooming into the 15-minute, here's what we have here. And so, working on breaking this out here, you've got this 15-minute bullish divergence right here. And then you've got it again right here. And so, as you can see right here, let me see. Oh, wait, no, you don't. Not on the 15-minute. It dips down a little bit lower there. So no bullish divergence there, but you did have it prior. Drops down. And then here we go heading on up here. Looks like, 1, 2, 3, 4, 1, 2, 3, 4, then maybe 1, 2, 3, 4, 5, kind of getting up here. Right around that 15-minute pivot. So on a pullback, if we're pulling back from this area, I'm looking at maybe getting a target of this upper half of this range here. So 56,716 to maybe around 56,916 or so. 56.7, yeah, 56.9, about the $200 range there. And so that's what I'll be looking at if we get this pullback here. As you can see, the 1 hour, we're kind of topped out here and overbought. Stoke RSI. RSI still has some room to go there. You've got volume coming in on this one. This is that breakthrough, that 15-minute pivot right here. So that's that volume as you kind of hit it there, and it pulled back a little bit, and there was no follow-through to the downside. So you have this spike of volume right up here in this supply area. All it does is send it back just a little bit, and then it takes off above it. It's come back retesting this as support, it looks like. So we'll look if we can continue up higher. If we do, our next target, like I said, is this pattern target here, descending channel EQ, that kind of area. When you get a impulsive breakout above that EQ, so that means expanding volume, larger candle spread through the EQ, that should give us a target of the descending channel resistance. And then if we get a impulsive breakout above that, that's going to give us a pattern target here of basically $6,950, $6,949 and 51 cents, $6,950 above the point of breakout. That'll be our pattern target there. So that's what we're kind of looking for there. The 4 hour is right here. You know what? Let me get rid of some of this stuff on this time frame here. Let's put that down to 1 hour, and we get a little bit clearer view on here on this larger time frame. I guess I can leave that right there. So yeah, definitely looking to get that breakout above that level. I mean, in terms of this range here, this just basically becomes a bear trap down here, and this is what I warned our members about on a drop through here, that it may just become a bear trap. In terms of zooming this out to the daily here, look at that daily candle. You kind of get rid of this right here real quick. Take that down there. And so, you know, again, look at this volume coming up here. You know, again, we had this volume thing here, and then supply came in more, okay? So we had even greater volume here, right? And here we are again about halfway, a little bit more than halfway of the volume of yesterday, and we've completely reversed and heading back up here using this pivot as support. So, you know, again, a lot of times people see it, oh no, look, it broke down below the pivot. Well, when you're trading pivots, what you're looking for, if you have a breakdown where it closes down below like this, what you're looking for on that next day is a rally back and close back above. And so if you break down and close the day before and then close the day of, you know, the next day above, that you consider the pivot to have held, to the support to have held there. And so if you're just trading this chart like this, pretty much a naked chart here with just these pivots on here, I mean, what you're looking for is just a breakout above this swing high, the 60,977.21. If you get that, you see you've got that high volume node there. If you're getting that, you should be good to go minimally up here to around 65,550 or so. You break through that, you're looking up here at around 68,150 or so. And you break up out of that, of course, you're taking up. So, I mean, there's your big picture look at it right there. If you make those levels and those are your targets, you make those targets and you go up to the next target and you work yourself the way out. You know, as far as what's going on here, I think there was a Discord I talked to, our members there, and I talked about the fact that that this may very well be the bottom here. One, you know, you got the pivot there, but two, if you look right here at your RSI, right here, so you've got this dip here at 38.13. The last time it dipped at 34.50 was right here at the low. Let's see, you get over here, 34.25 was at this low over here. Get over here, another 34.83 was this one, and then of course just dipping right back up. You know, so it only dipped below into oversold here back here on the 19th of May when we had this first initial drop here. Since then, it's always been around that 34 level, and then here we are a little bit above it at 38. So I mean, if we're looking at that, it seems to make a good argument that that we're done there. And if we're looking at the RSI here, you know, you've got your wave, you know, the end of your wave here, you know, as we've got our count here, right? And then we've got this flat, and so you have wave A, wave B, and then 1, 2, 3, 4, 5 in terms of your RSI there. So, and then of course you've got all this volume picking up down in this lower half here. In terms of range, all you've got is this basically what comes down to a spring here below the range, and we're looking for a rally up. And if that is what it is, as I told Discord, we should expect a pretty easy move back up. It's not going to happen like in 2 days, I don't think, but you know, we should be able to move up and up through here. You know, this came down pretty rapidly right here, especially in this area. We should see that kind of rally back up and above. And then once, of course, we pop out above that all-time high, that opens up that move up there to 100,000 and higher, quite possibly. So, you know, that's kind of where we're looking at with all this. It doesn't look terrible to me at all, but, you know, it looks pretty good. But again, we still need to get this breakout above 59,975.20 as your first real clue in the grand scheme of things that bottom may be in. You may go, oh, but look, we're up 5 waves here. Well, that's a good start, sure. But if you're looking at this as being this large wave 2, well, then you need to get past this, you know, interior wave 4 here first. You can't just go off of right here and go, oh, it's definitely bottom. So make sure you guys understand that. I know, you know, a lot of times you want to get these things in as quick as possible and whatnot, but yeah, that's what we're kind of looking at. Let me see here. Who else is here? Dominicus. And you guys are going to kill me someday with these names. Good to see you checking in, man. Thank you. Thank you. Let me see here. G Fuel TV. Good to see you. Let me see. Have a great weekend, Mark. Take care, man. Let's see here. Esteban's here. What's up, man? Good to see you as always. Leighton says, is that downward channel still legit as it hits on the upper and lower lines? Seems quite ragged. Is that downward channel legit? Is this what you're talking? I'm not sure which downward channel you're talking about here, man. Is this the one you're talking about here? Well, if this is the one you're talking about, I've kind of made this, I made it clear. I was like, well, usually with a channel, what I'm looking for, if this is a downward channel here, I'm usually looking to go from the swing high to the next swing high, right? So usually I'll draw the channel like this. Yeah, this is what you're talking about? Yeah, so usually I'll draw it like that, right? And as you can see right here, we're kind of hitting the bottom end of that. In this particular case, I've drawn it from the lows here to the high in the middle. And I've really done that. I don't, I guess what I'm trying to say is, if I drawn it like this, then I would be all about, okay, yeah, really strong about the pattern targets and the channel and everything. But drawing it like this, where you're coming in where you're starting a downtrend, but you're drawing that channel off the bottom, it works sometimes. A lot of times it actually works. Sometimes it doesn't work exactly. So, but it gives us a guideline as price moves. We can look right here and we can see that the EQ here works really good as resistance and support. Resistance again as it works through there. So this EQ is what I'm interested in. And those other lines are just, lines off it, parallel lines off it. But I'm really interested in EQ because of the way it works as support and resistance all the way down here from back here at the beginning of November. So, almost 10 days ago, right? So that's what I'm most interested about. This is, a guide to kind of let you understand how that price action may be playing down. But also, as far as Elliott Wave goes, again, you can draw something like this, and we'll often do this with Elliott Wave. And what we look for is when you have 5 waves down, excuse me, when you're looking to make 5 waves, the third wave is usually the breakout of the channel. And so, again, we have that right here, right? And then 4, and then 5 continues down. So in terms of Elliott Wave, normally we would draw this channel off here. And if we think this is, a 5-wave decline, we would expect wave 3 is going to break down below that channel support. If it was going the other way, we would expect that wave 3 would break out above that channel resistance. But in this case right here, what I'm really interested in is this EQ, and I want to see an impulsive breakout above that. And then that'll give me the thought, okay, well, now we're coming to this channel resistance, and then we get the breakout there. In terms of, the other way you can look at this channel here and the way it's working down here is that this is is this range here as price is heading down, right? And so within this range, this basically is kind of like a spring area below that range low kind of idea. So, it ends up becoming, again, what people would generally call a bear trap in there, and then it rallies back up here. So it's looking good off that. So, all the different ways we can look at it, it's playing out as we would expect. But if waves and everything else were out of this, and I just had this descending channel here, what I would need to see is an impulsive breakout above that EQ. Breakout above it, stays above it, and that'll tell me, okay, we're going to break out above that parallel line coming off the top of that channel, and we're good to go heading on up. Because, again, of how well that EQ has worked here as support and resistance along the way. So, yeah, that EQ is really what I'm interested in. And if you guys ever pay attention to me when I talk about channels, first of all, guys, I got to let you know, if you don't know, channels are the thing, man. Everybody goes out there and tries to find all these different ways of looking at how price action goes, man. Channels should be at the basis of everything that you're looking at because they tell you how that price action is being contained, right? So they give you a lot of information. But most importantly, in the channel is the EQ. So whereas we talk about the channel as the most, is this thing that should be incorporated in all ways that you're looking at the charts, it's really because of that EQ, because of that right here, that middle line right there, okay? Because that's where you're looking for those strong breaks above or below to kind of let you know what may be going on with the support or the resistance of the channel. That EQ is where is what's up. You can think of that EQ being the mean and the support and the resistance being the deviations off that. And so again, you're looking for price to be kind of contained between those two deviations, right? And you're using that EQ there as your lock point, right? And so that way, then when you get that breakout from those deviations there, that kind of lets you know what may be happening as far as what's going on. But again, guys, it's like just using Wyckoff in general. It takes a while to get used to those particular ranges and how to understand them and how to look at them. And not all ranges are created equal. Not all channels are created equal. As I said, we can draw in Elliott Wave. We would draw a channel right here off the swing high to the swing high with the swing low in between. And if this was to be in Elliott Wave, if this was to be an ABC right here, we would generally expect it to remain within the channel until it's done, and then it would break out of the channel, right? If it's a 5-wave move, then we expect wave 3 to break out of that channel. And so, that's how Elliott Wave, that's how we use these channels in Elliott Wave, right? One of the ways anyway. So it's a little bit different than your normal channel usage that you would have. So, yeah. What's going on, Chemo? Really cool to see the channel incorporated in Elliott. Yeah, man, I incorporate that in everything because it gives you an understanding of the flow that goes on there, right? It lets you understand how that price action is playing out within generally, how it's going to be. Because again, remember, people tend to ebb and flow in understandable ways, right? They tend to be, people in general, the way that they that their emotions are, they're generally level, right? And sometimes you have extremes of highs and extremes of lows in emotion, right? But in general, as long as there isn't some kind of chemical imbalance in the brain, right, you'll come back to that average, that normal, right? And so all you're seeing in the charts here is the same thing. You're just seeing the physical representation of that. Remember, these charts are just this movement between fear and greed in the aggregate, right? The aggregate being all the market participants, right? And that's all that we're showing here is that fear and greed, that movement between it. And so that's why you get the channels. That's why channels are so great. Now, that doesn't mean you won't have them dipping below or pushing out above and kind of bear traps and bull traps. But that's when you're taking your time in the markets and learning and understanding how things play out generally, that you get that understanding of how that channel is going to work. So, but yeah, pulling in channels, man, fantastic way. Like I said, there's few things that you can do to add to whatever else you're doing. One of the things, especially if you're newer, is throwing on your pivots. Again, guys, I'm going to tell you, go right up here to your little FX symbol, click on it. This is for TV here. Type in pivots. Pivots point standard. That's all I do. Just click on that. Boom. Shows up. And what that'll help you do, if you're a newer trader, is it'll help you understand. I always tell you guys to look left, right? Well, this helps you look left and understand where you should be looking at in general as areas of support and or resistance. Technically, they're just channels, right? Between these right here, you can think of just as ranges, right? That's all they are. But that, and then of course, utilizing your channels here, especially for your trends in whatever time frame you're looking at, is a huge, huge benefit, guys. It just gives you a larger general understanding of what may be going on. Because at the end of the day, you guys spend a lot of times often looking for specifics. You want to know exactly where the lowest point is to buy, exactly where the highest point is to sell. And all you should be paying attention to, especially the newer you are, is just in general, which way is that trend going? I need to get into that trend and in general, ride that trend for a while, lock in profits and get out. And if you do that consistently, that'll get you where you want to go in terms of wealth and whatnot. It's when you try to start being really, really specific that you start increasing the odds you're going to be wrong. And especially if you're doing that before you're really well versed in markets and trading and whatnot. So, yeah, just keep that kind of stuff in mind. I know a lot of times it's not what you want to hear. You want to be doing this exactly perfect from day one, but you'll never be perfect at it. You'll never be exact at it. I've been doing this for 25 years now. It's If I ever get near a bottom or a top, it's more the exception than the rule. Though I've gotten pretty good at it, but it's still, it's 25 years, guys. That's a lot of practice, right? Exceptional amount of practice looking at the charts and studying and understanding and whatnot. And it still doesn't guarantee I'll be right. Sometimes I'll get it right on the way down, for instance, in the movement, and it's only a temporary stop. So like this right here, one of these right here, I had a demand structure. It hit the EQ perfect. It's usually what I'm looking for it to do, but it was just a bounce before it continued lower. I think it might have been that one right there. Maybe that one up there. But anyway, so I don't want you guys getting into trading thinking that you're ever going to be able to be perfect at it, that you're ever going to be able not to have to worry about stop losses and risk management and all that stuff. No, that's the bread and butter, guys. That's what determines whether you're going to be successful over time or not. You can do everything else, but if you're not taking risk management seriously, that boring stuff, you're just going to give your money all to the market, I promise you. Okay? So hopefully you guys will pay attention to that there. I do draw from the wicks. Yeah, man, for me, this is something really frustrating. A lot of people out there, they talk about how great traders they are and whatever, and yet they trade based on, they just kind of draw just general ideas, right? So they're like, oh, look, they just draw a real quick channel and go, oh, look, there's a channel. But if you're new and coming in, you may not understand where you should enter based on that channel there. So with something like this, they might get in there with this, and they might usually draw something like this here. Let me see. They'll draw a channel like this, right? And they'll ignore the wicks, and they'll do something like this. And if you're new, this is very confusing. You got lots of dips out. How does the channel make any sense? Lots of dips below and above as it plays out. It doesn't make any sense, right? Listen, guys. It's for the same reason that some people actually, let me see here. They get in here and they do this. Let me take off the wicks here. Boom. And they take the wicks. They just trade just the candle spreads, right? Just the candle bodies. And man, oh man, I think that's absolutely crazy because some of your most relevant information, some of your most important information comes in the wicks. It's not so much just understanding on average where price ends on its movement is not good enough. You want to understand what is the extreme. How far beyond that are people going? And if you'll watch, if you incorporate something like this, and that's where those wicks come in handy, right? Because they let you know, okay, well, if you don't have them on there, you don't see all this, right? And so you can't compare price action and volume, which is essential, I think, as far as overall really understanding the market. You can't do that without the wicks. You have to understand how the size of that body in relation to that volume and the size of the wick compares to other places that you need to look at to get an idea of what price may be doing. Otherwise, you're just looking, okay, well, where's price opening and closing? Well, that doesn't give you a whole lot of information. And oftentimes, again, you can go up here and get your volume. Let's say they have it in our built-ins now, volume profile. And so you can get like your fixed range volume here. And you can say, okay, well, in this right here, you see here's your volume. And you got a lot of volume. It's the low one, but where's the volume actually coming in, right? Because that makes all the difference in the world. Is the volume coming in at the bottom? Is it coming in at the top? Is it coming in elsewhere? So you get in here and you start looking at this. You go, okay, well, look. You got all this significant volume at the top. A little bit more here. Not much at all down here, right? Even though, that's all that's your huge bit of volume, right? So what you do is you can zoom in here when you do that. See, I'm going to pull this over here now. And you start getting this idea of where that volume is coming in. So we come down here and we go, okay, well, let's look at this right here. These lows down here, this volume down here. And we'll bring it in from, guys, let me kind of pull this over here a little bit. We'll bring it right on down there to it. And so you can't really see it a whole lot here. If I'm zooming in a bit so you can see this. But look, but you can see here, this tells you in this, in these two candles right here, where is the volume coming in? And you'll see that most of the volume is actually coming in up here at the top, not down at the bottom of the wick. And so that's important information to know, right? And you can see that further down here, you got a little bit of a breakout down here with the volume. But understanding where that volume is actually coming in and how much more significant within that structure is going to help you a lot more than trying to figure out, okay, you know, without that wick information on the bottom, because sometimes a lot of your volume will come down in the wick. And that can let you know the areas of where people are interested. So in this case, people are interested up here, and it dies down here. And what ends up happening? Look what ends up happening here. I can't even get this all the way over here. So it's up in this area that they're really kind of interested, right? So it just kind of dead cat bounces up and then lower. Boom. Had that volume come in closer to down here, it's more likely it would have been caught right in this area and then rallied up. So, you know, ignoring that that volume, you know, or the wicks, I think is just absolutely silly. It doesn't make a whole lot of sense because much of your information, especially the really important information, comes in those wicks. It lets you know where the extremes of the market is going. It's not good enough to know that the price just stopped here, you know, ultimately closed here. What was that? What was going on beyond that? Is there a chance it's going to continue? Is the bottom in? You know, these kind of things you can get from that information, or at least get an understanding of a better understanding of it. So yeah, I would always suggest you guys draw from the wicks, and the only time that you deviate from that is, let's say you're drawing right here from the wick, and there's no wick here, it's just the candle spread. Well, then you can draw to that candle spread. What you're looking for are these extremes, and anytime you're drawing patterns, those patterns should be based off the extremes, not the closes, not the opens, the extremes of that candle. Again, if you ignore it, you're just missing all that other information that's in there. So yeah. Nope, don't want to become famous. I'm going to get rid of that. Hangry Patrick, you love channels? Man, they're so easy to incorporate, man, and they give you so much just general trend information. Again, guys, I'm going to say this one more time. Being a successful trader is more about understanding the trend and locking in profits in that trend than it is trying to figure out the specifics, preciseness of lows and highs and whatnot. Pretty much anybody out there can become a successful trader just concentrating on the trend, just understanding the general trend. But we all, you know, there's a lot of impatience, you know, with our emotion. There's a lot of fear of missing out. Always concentrating on that which you don't have rather than that which you have. And guys, you got to be honest. That's what happens in life, right? We're often trying to keep up with the Joneses, right? So you look at somebody and somebody has something cool that you don't have, and you're like, man, I need to get that. And so you concentrate on the fact that they have that and you don't. So it's what you don't have rather than everything that you do have. And we just see that manifest itself in the markets as well. But that type of thinking, especially in the markets, is going to cause you to take chances that you don't need to take. You know, you're always trying to get more, right? To the point of, you know, less effectiveness. You know, it's just economics, guys. You know, you can do a thing, and when you do a thing at first, you get a great bit of utility, right? You're looking at that marginal utility, right? But if you do the thing over, you're getting less of it. So think of it in terms of ice cream, right? If you like ice cream, think of your favorite ice cream, and man, that first scoop is just, man, it's just where it's at, right? And then you go and you have a bowl of ice cream, and you're still doing pretty good, right? But it's not quite as much. If you go and make yourself a second bowl, well, okay, it still kind of tastes good, but now it's like, well, this is getting old now, right? Make yourself a third bowl, and this time you're full, you're not interested, you know, maybe. But in general, that's what it is, right? So it's a marginal utility, right? As you do a thing more, you're getting a lesser return on it, a significantly lesser return on it. And that's what you should think about in trading. You know, if you can grab, let's say you're starting up here, right? And you get into the downtrend and you can grab, from here to here and lock in that profit. Man, you'll feel great, right? If it gets down here, okay, yeah, you're still going to feel great, but, it's not as great because there's more fear, right? Because you're getting closer and closer to the edge there. It's doing a lot of this overlap and you get more fearful. So what that excitedness that you should have is it's getting lower, is finding a counterbalance there in the fear that you're getting, which is making it uncomfortable. It's not making it fun. This is fun. Shorting here and closing here, this is fun. This right here is not so much fun. This is stressful. And that stress eats away at that fun. So that marginal utility of getting that slightly lower low is not worth it. In terms of the stress that you feel and whatnot. Grab that, let this happen. Grab this, let this happen. Maybe grab that little bit right there. You will be so much happier and so much clearer in your trading than if you're trying to get in here and get this all the way down here, or even, down in this area with all this overlap for days. It's going to drive you nuts. Completely stresses you out. All right? Greed is good? Hey, greed is definitely good. Talk to Gordon Gekko, right? But you only want to be so greedy. Again, you get to the point where it just becomes, being greedy then becomes a stress on you. If you're greedy to the point where it's fun, okay, that's fine. But when you're greedy to the point where you're stressing out over that, at that point you're gonna potentially make mistakes. And even if you don't, if you ask me, somebody's been doing this a very long time, the stress that holding through this causes is not worth it. Locking in this right here and not having to deal with all this is so much better. Because what happens is every time it dips and rallies back up, you start thinking, gotcha, do I need to get out? Do I need to get out? And it drops again, you're like, oh, okay. But then they're bouncing, oh my God, do I need to get out? And that just is amplified when you're heading sideways, guys. It's absolutely torturous to your emotions. And it doesn't make for good trading, guys. Trading should be fun. It should be enjoyable. And it can't be when you're stressed out like that. People get burned out trading because they deal with stuff like that constantly. They're forcing themselves to tap out. You can't do that consistently and expect to remain in the business for a long bit of time. You can't. It's important to get away from the charts for sure. Whether you're doing that or not, it's still important to get away from the charts, regularly, so that you can reset and your emotions and everything will reset. And getting outside and spending time with family and pets and stuff like that, it does so much for you as a trader. So yeah. May I ask how you are fitting the larger horizontal channel? Oh yeah. This right here. This is right here. So you go from your buying climax to it looks like potentially this looks like reaccumulation maybe here. And so if that is, then you get your buying climax and your local selling climax, automatic rally, up thrust there. You get a spring down here and you look for it to move back up. So phase A, phase B, phase C, and then this interior mark will be phase D, and then exterior will be phase E. Thinking in terms of Wyckoff. So yeah, that's how I'm looking at my channel there for that, my range. Good morning, Andrew. Good to see you checking in, man. Bill says that bowls of his favorite ice cream have never had that effect I talked about earlier on him. Need discipline not to have a second bowl. Well, I like my ice cream as well, certain kind of, but man, I'll tell you what, after that first bowl, it just starts getting a little, I start feeling weighed down. No pun intended there, by the marginal utility that I'm getting out of it as I continue eating it. You get in there, Bill, even you with your favorite ice cream, by the time, if you get to 4 and 5 bowls, man, you're going to be like, nope, not getting anything from this anymore. Have a great weekend, Crypto Mowgli, as always. Let me see here. That Wyckoff looks good. Got the volumes, everything. Yeah, we're kind of looking at it. Not as good as I'd like. But in general, we do have this decline here. coming off like this. And then we have this. If this is spring here, of course, we should then overall expect to see volume kind of rallying up here as it goes out. Your big bit of volume, if this is reaccumulation here, as it looks like, you've got your resistance here. And so your big bit of volume that you're going to see here, your large candle and your large volume, is going to come on the breakout of this resistance. So probably somewhere in this area right here. So what is that? Maybe 62.6 to 65.6 kind of area, I think, is probably where it'll be. And what you'll see is you'll see large candle spread, large spike of volume as it breaks out through that supply resistance there. And once we get that, that's our jump across the creek, and that'll say, okay, yeah, the bottom's in there. This is reaccumulation, and we're popping on up here. And of course, that just opens up, that breakout above the all-time high there opens up that target to around 106,000 initially, if the count coming off the bottom is correct right now. So yeah, that's what we kind of be looking at there. G Fuel, you're very welcome. Let's see here. Leighton says, looks like the local wave 1 is ending at the top of the Bollinger Band. I think I have some Bollinger Bands sitting around here somewhere. Oh, yeah, look at that. Let me take off everything else here. Yes, sir. So we had the dip off the Bollinger Band support here. We went sideways around that resistance, or around that EQ of it, that median line, and then used this support, rally back off. And so, yeah, again, I talked about how if we're going to pull back, I'm looking at this area right here. As you can see, that's right there around that Bollinger Band median there. So, again, would expect to have that pullback into that area and then that rally up and through. In which case, it'd probably be a nice strong rally. It'd be a wave 3, right? So this is a 1, it'd be a 2, a 3. And we'd probably see the candles kind of break out above the Bollinger Band as it does that. But I think we're probably getting close to a need to pull back here to that area. So if you're not long yet, you'd probably want to watch for something around this area down here, around this 56. Again, what I said earlier, 56.7 to 56.9 maybe kind of area, as a possible area to go long on that. If the top's in right now, if we actually look at this, that'll give us a... that area will give us a pullback of the, looks like the 50, yeah, basically the 50% to the 61.8, right around that kind of area. So, yeah, would make a lot of sense to hit that. I mean, it could stop short at the 38.2 here, right around 57.320. It can get front run on that. I wouldn't be surprised at that. But looking for a pullback toward this area. The break back out, once this pulls back, the break back out above that swing high. Be good to go. If you can see a clear wave, 3 waves down, then just look for a breakout above that second wave. So 1, 2, 3. So that second wave, 2. Breakout above that will indicate that that correction's done and we're heading up. What's going on, Telltale? Good to see you checking in, man. So that's what we're kind of looking at there, guys. If we jump on over here to the dollar, whoo, look at that dollar rallying back off up this morning here, locally here. And so, looking at potentially a 3 and a 4 here, and then this looks like a 1, 2, 3, 4, 5, and we've got a pullback here to the 61.8. So 1, 2. If this is 1, 2, then we've got wave 5 of 3 up here at around 97.256. Is where I'm looking for that to go. So we're just looking for a breakout now above that there. Let me zoom into the 15-minute here. Let me see. Where's our lows here? 580, 95, 799. Yeah, it looks like this is potentially wave B right here. And so we've broken out above that. Large candle spread. Probably large volume on that as well when you get the kind of candle spread. So that should increase the confidence in the count here. So again, 1, 2, 3, 4, 5, A, B, C. And now we're heading back up here. 1, 2, 3, 4, 5. Or maybe not, maybe 1, 2, and then 1, 2, 3, 4, 5. So 1, 2, 3, 4, 5 still coming up there. But anyway, overall looking to continue that higher, I believe. So, again, dollar goes up. if you're playing dollar pairs, guys, I am short Euro USD right now at 1.13082. I was long. What was I long? I was long. Let me see here. No, I was short. I was short Euro USD overnight. Let me see here. I got in at, I shorted at 1.13532 last night. 1.13532. And so I closed out of that this morning, not at the lows. It bounced before I got and looked at the charts. So I lost a bit. I think I was up probably about 100 pips or so. Closed out at around 40 pips, I think. That's fine. Like I said, I'm short again now from that's the current price. 1.13082 is where I'm short Euro USD. So just kind of enjoying the run with that. Did a little bit with the USD yen recently as well. But jumping into this bigger move here because the dollar just looks so great. But yeah, so, again, kind of zooming out here to the bigger picture on the DXY. This is that bigger chart we're still continuing to look at here. So we've got that pattern. I'm going to get rid of that now so we can see a little bit better here. Look at this, guys. So we've got this large range right here, right? This range which goes back here from December of 16. Range lows down there around February of 18, right? And then we've got this here. And with that, we are above the EQ of the range. So again, remember I talk about, the EQs of channels and whatnot. That's where we're at. But we had this, again, we had the breakout of this daily pivot, the retest as support, the rally back on up through it strong, R1, R2. Hits at R3 right at this ascending channel resistance, peaks out, comes back down. See how it comes back down, but finds support right there on the EQ of that large range. So we'll look and see if we can continue to break on out of there and head on up. Let's see, no bearish divergence there. That got invalidated with the continued move up. But, again, guys, remember, a couple of things we're looking at. We've got potential macro bottom down here in January. We've got this blue range, and so this blue swing range right here, which has a target up here of 97.77. We have that potential Adam and Eve what's this called? Inverted head and shoulders. Left shoulder, double head, so it's a complex, and then right shoulder right there. We popped out, came back, retested, and then kind of rallied up. And that gives us a target up here of around 98.725 based on the height of that inverted head and shoulders. Again, people get tripped out at first if they're not used to these patterns. They kind of hate head and shoulders. But anyway, you can have complex versions which has double, left shoulders, double right shoulders, double heads, stuff like that. This one's complex. It has two heads here. And so that's all we're looking for is that continuation up there right now. So, DXY still looking good overall on that. Weekly, we broke out here above that weekly pivot there. Again, we've popped out above my wave 4, 1, 2, 3, 4, 5 here. So that was that wave 4 at 94.795 here on the futures. I think it was 94.745 on the regular chart. But that area, we've broken out above it clearly, impulsively. And that's our first clue that the bottom may be in. The same thing I'm talking about on Bitcoin here. I said we got to get above wave 4 here. Because once you're above wave 4, wave 5 can't subdivide any further, right? So if this count is correct and we've got a bottom down here, then this is wave 4. And so breaking above it means wave 5 can't subdivide any longer. The only question is, what do we have here? Right now I'm kind of looking at this maybe as a 1-2, 1-2. But, I think there's the possibility that this could just be like a leading diagonal. So ABC is 1, 2, ABC is 3, 4, ABC is 5. But I'll have to look in. I didn't measure that actually. Let me see. There's wave 3. Wave 1 is larger than wave 3, just barely larger than wave 3. So wave 5 would have to be shorter than wave 3. Let me see here. And it's broken out above it, so it's not a leading diagonal here. because wave 1 and wave 5 would be larger than wave 3 here. Unless maybe this could be B here. So maybe it's like an A, and then A, B, C is a B, and then C here. If we do that, now wave 3 is definitely the largest, because we're coming from down here to up there. And so in that case, wave A is shorter than wave B. And if this is going to be a diagonal, then it would have to be, because wave B is larger than wave A, then wave B. Because wave 3 would be larger than wave 1, wave 5 has to be larger than wave 3. It has to be an ascending broadening wedge. And so in that case, that means wave 5 would have to get above 98.17. So if wave 3 is bigger than wave 1 in a diagonal, then that means you're going to have a broadening wedge, and wave 5 has to be larger than wave 3. If wave 3 is smaller than wave 1 in a diagonal, then wave 5 has to be smaller than wave 3, and it's going to be just a regular wedge that you all normally used to looking at. So if this is not a 1-2, 1-2, if it's a wedge here, then it's going to have to be above that level I just said there to finish off. So yeah. Carlos, have a great day. Let me see here. Any current promos considering the $99 membership? Currently, right now, as I said at the beginning, you can get 3 months for 25% off the already reduced price there. So that's what we're doing right now. And that's going to be good through the beginning of next week. Again, guys, I just tell you, listen, if you're going to join us, just make sure you guys are seriously ready to soak up everything that we have there, because there's just so much content. There's so much education in there. I cannot even begin to make you realize how much of it there is. Well over 150 hours now. And so whether you're going to be in for just a month or 3 months or a year or whatever, just get in and just try to soak up as much as you possibly can, so you get the greatest bit of benefit from being in. I'm not here. We had one of the greatest comments ever not too long ago. I shared it with you guys. Somebody who was a member with us for 6 months. And they were excited because, they stayed with us for 6 months and they figured they got enough out of it, and they left. And he said, again, we didn't chase them down. We didn't try and make them stay in, anything like that. We were like, okay, that's great. Just continue to continue your learning, continue doing what you're doing. I just want us to be here for as long as you guys want to be members. I don't want you to be a day longer than that. Because it doesn't do you any good, right? It doesn't. Again, my goal here is to disseminate information and education. That's what my goal is. And so, yes, it makes money along the way as far as what we do, but my goal is not making that money per se, right? It's not like everything I'm doing is all to an ends of making that money. Everything I do is all toward making sure that you guys get as much of that education as possible for as long as you're going to be there. Some people choose to leave when they choose to leave. Other people, it's not cheap. It's a lot cheaper. It's a lot more inexpensive than what we actually put out. I'll tell you that. You're paying less than what the information's worth, as much as we do. But for some people, a little bit more hardship with money and whatnot, so they can only, be in for a month or two or something. But I want to make sure, whether you're only in there for a month or two or whether you're in there for a year or more, that you're getting out as much as possible while you're there. It's no good for you if you pay the money to come in and then you don't soak up everything you can possibly soak up. Bill, have a great weekend, man. But anyway, I hope that makes sense, guys. I hope that makes sense. Now that said, most of our members, upwards of 90% of them, remain with us for a few years. We've got people, again, that have been with us from day one, still today. But it's up for whatever you do. They stay in because they enjoy the atmosphere, they enjoy the continual learning, all that stuff. And they can afford to do so. But again, guys, if you can only come in for a month or for 3 months and take advantage of one of the specials we have, and that's it, just make sure that you guys are getting absolutely every bit of that you can possibly get out of it while you're there. Okay? That's all I'm looking for. I don't want you coming in, spending money, and then not taking advantage of it. Just kind of forgetting that you have it. It's a waste of money. Hey there, Carol. Good to see you, man. He says, you're doing a great job. Have learned so much. I appreciate that, man. Let me see here. Venture, what's up? You're looking at shorting the British pound, the cable there, based on the daily charts pivots. Wondered how it looks to you? Well, let's see here. Let's see here. Let's look at the Great British Pound against the dollar. All right. Let's see here. Looking on the daily. Let's see here. So really kind of coming up near that, if you just look at the Bollinger Bands, near that that median. A lot of room here to still fall on the in the Bollinger Bands there. But it's kind of really mid-range in the Bollinger Bands in that lower half. Let's see here. I mean, clear downtrend, obviously. Market structure is bearish here. High, low, lower high, lower low, lower high, lower low. On the daily, we're nearing a, overbought here. Now, we do have this bit of bullish divergence, which has led to this move up. So we might have some more upside still to go here before it rallies back down. But, right now we're getting a spike of volume here on today, as you can see. So locally, what I'm interested in is the fact that yesterday we had this doji, and today we're getting this strong spike of volume afterward, and it's to the downside. So the closer that this closes toward the day's lows, the more likely this is a reversal right here. And looking at it, we can go ABC. Let me see here. So if I'm looking at this, it looks like a 1, 2, and then 1, 2, 3, 4, 5. So 1, 2, 3, 4, 5, and it looks like ABC. Is that a 38.2 retracement there? Yep, just about. Trying to pull this real quick. There's 38.2 right there. If it does continue to rally up out of there, I'd look at this wick right here, which just so happens to be that 50% retracement as the likely rejection area. Look at how perfectly that 50% retracement lines up with the EQ of the daily supply structure. So yeah, could be an ABC up here, but we need to see some follow through down. So I'd be looking for a breakdown below. Actually, you know what? Let me see here. What's this swing low here? 1.33964. 1.34. Okay, so this would have to be the swing low here. That would have to be wave B. This swing low right here. So yeah, it looks like I got 1, 2, 3, 4, 5 here. ABC. 1, 2, 3, 4, 5. I mean, it looks like it's one and done there. Here it looks like we've got a 1, 2 off here. This could be 3, 4. Could be a bit of a leading diagonal here, or it could be 1, 2, 1, 2. Pushing up into it, the first thing I would say is maybe 1, 2, 1, 2. But as you can see here, now this 4-hour pivot's going to be done at the end of today. You're going to have a new 4-hour pivot next week. But for right now, it's finding resistance right there. So I want to see some breakdown below this swing low here. 1.34572 here on Oanda. I want to see a breakdown below that before considering shorting on something like that. Like I said, I think we may be getting a 1, 2, 1, 2 here. But until we break down below that swing low, we'll wait for sure, right? So yeah. Oh, you're looking at the futures? The futures should be pretty close to what we're seeing here. But yeah, this looks like that would be an A and a B and potentially a C here. Just about the 38.2 retracement up in there. See that you got this supply right here in this right here in this wick. There we go. Looking at the wicks, right? Information in the wicks. There's supply there, and that's what's giving you the rejection. Pushes up, rejected, try again, rejected lower. So a lot of supply in there because it made a lower high. Taking it down. Push it back up here. If it gets rejected pivot, heads back down below that swing low. That would be good. Really need to get it below this one right here. 1.34, oh, I'm sorry, 1.33964. If this is an A and a B and a C, then break it down below wave B here says that wave C is done. It can't turn into 5 waves. It's only 3 waves then, which would make this corrective, and we should be heading down lower generally. Now, obviously, you know, guys, the one thing you have to be careful about with that is you can always have flat corrections, right? And so then that would be ABC up and then ABC down and then 5 more back up. So, you know, in general, though, if you've got 3 waves and you break back down below that second wave, that tells you, okay, that's just a 3-wave correction. It's done. Now you want to go further down there. Let me see here. Somebody was asking about a chart earlier. I'm not sure where it was, though. If you asked about it, ask about it again so I can find it there. I saw somebody was asking for a chart earlier. So, yeah, that's how we're kind of looking there. While we're getting around to that other thing, let's see here. What else do we got? So this was the setup I gave you when it was way down here. And there we go. You know, we made the first target. We're pulling back, looking for a breakout to make the second target here. Breakout that gives us our 3rd target. Breakout up here gives us our 4th target and maybe 5th target up there. So that's the same one that I put in the market breakdown probably a week or 2 ago. That's set up there. So it's working out real good. I told you at the time it'd probably be a sleeper. Most people wouldn't see it. And it wants to head up there right now. So it's looking pretty good at the moment. With the Litecoin USD here, again, doing the same thing as I am on the Bitcoin with the channel here at the bottoms. Again, the EQ doing a great job of resistance support right there. Here we are breaking out above it. We want to see an impulsive breakout above it again on expanding volume and larger candle spreads, which will then give us a target of the descending channel resistance. You break out of that, you got a pattern target of 59.32 above the point of breakout. And generally, if done right on a wedge or on a channel, your target most often is going to be right around where it starts in that area. So yeah. So anyway, looking good on that one right there. I've got quite a bit of Litecoin actually. So enjoying this, you know, previous movements up here to 300, pulling back now, trying to rally again. So that's just the 2-hour chart. Look at that daily, though. Daily reset down here and oversold. Bottom down, oversold. Coming back up, trying to cross bullishly. 1, 2, 3 maybe. Coming down there. Basically, just finding support on your previous resistance. You built a base here right above the pivot. Back on it. Looking for that rally back on out. So, yeah. That's what I'm looking for. Trying to get that breakout there and headed on up there. My feelings wouldn't be hurt if Litecoin hit $1,000. My feelings would not be hurt with that at all. Let me see here. ENJ USD. I don't think you were the one that asked, but I'll go ahead and make that one. Let me find a chart here to look at. Let's look at real quick here, just before we do that. The Dow just keeps dying. I mean, really. That's where we're at right now. I've got a wave circle 3 target here at 35,382.5, and a minimum wave Roman numeral 3 here at 35,261.50. It just continues to ride on down here. Breaking down below wave 4 here, wave circle 4, or circle Roman numeral 4 at 35,493.79. We'll say that wave circle 5 has to be done because it can't subdivide any further, which would mean we're likely done with wave 5 there at the top, maybe in. So we'll continue to see what happens there. Locally, that circle target here, it'll be invalidated if price breaks out, or the index here breaks out above 36,014 and 0.40. That's a wave circle 2. If we break out above that, then the wave circle 3 target's no longer valid. But that wave Roman numeral 3 target still remains valid unless price breaks out above Roman numeral 2 here at 36,316.61. Okay. Let me see here. Leighton's talking about that Great British Pound chart there. Let's see here. Saying that the easy trade on this, on the Great British Pound USD is just longing and shorting the channel touches. Where are you talking about? From up here at the top? I guess from maybe here. See there. Where's that EQ work for us? Yeah, you can see right here we got rejected over here at the EQ there. So if we're breaking down below that swing low, I mean we should be looking for the channel support down here. Most likely as just a general kind of pattern target there. Should definitely be looking at that. My big thing here is this is a 1 and this is a 2. Right here. I think. Wait, let me see here. Make sure. I can't remember if that's a swing higher or not on my count on me at the moment. Swing high of 14.2505. And this one is 14.2426. Yeah, so that was, I guess, the top there then. Okay. So yeah, coming off that top there, then 1, 2, 3, 4. Looks like 5 here. So 1, 2. Potentially leading to, much further there. $1.28851 down here. Look at that. Not really impulsive here. Looking for that nice big move down. So I think we might get that. You can see that right here, we're kind of, if we look here, let me zoom out to the daily here, maybe a little bit easier to look at it. But you see this kind of area. You see how you've got this resistance, 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 all this right in here. So it's kind of this area here. See if we can get that. Yeah, there's that recent wick just up into that resistance right there. So this is kind of this area that we're kind of hanging around in here. So again, a breakdown through that, like we were looking at on the Euro USD. That's what we're kind of looking at here. So that's that same general area, looking for that further breakdown below it to kind of really get it going there. You have your high volume node here at around 131,522. So that would be a good place to really pay attention. Could be a little bit bigger bounce, and then a breakdown through that really opens up some more movement lower there, potentially. If we look at this, generally speaking, 1, 2. Let me see here. Yeah, I guess maybe a 1, 2 here. Let me see where that's going to get you with that 1618. Yeah, see, so could be looking at a 1, 2, 3, 4, 5. And so this could just be 3 down. The other possibility, maybe A, B, and then 1, 2, 3, 4, 5 is a C. So we'll see how this continues to work out here. We've got some overlapping here overall in this area here. But again, if we're losing kind of this low way down here eventually at 120, that should send it to new lows. Just larger picture looking at it that way. But yeah, a lot of room for further downside still on that. Let's see here. Yeah. Teo. I look at the same way all markets as you do with crypto. The only thing that's different is each market has its own kind of ebb and flow. So crypto tends to be much more volatile. So, in general, stocks don't move like crypto. Now, there are some that do, as you found. So, there is that. But in general, stocks don't make as large movements as crypto. Now, again, is what I've been talking about is when you get to market tops and all the euphoria and whatever, you might end up finding that it does, right? That it is making, because everybody's got all that money, they're just kind of throwing it around in there, right? So there's definitely something to pay attention to. But, in general, money tends to move sideways in ranges. Now, those ranges may be a decade or two, top to bottom, but in general, it just moves sideways. Unless you're the Turkish lira, in which case you just continue to die off. Yeah. I feel for you guys over there, man. Is it more boring? I wouldn't say it's more boring. Making money is never boring to me. So it just has its own, its own peculiarities as far as how it moves. But you use the same techniques, the same styles, the same everything else you use in crypto to trade all the other markets. Yeah. ENJ USD. Looks like we got this range between the pivot and the R1. Looks like we want to break out. Our range has a drop in volume. And then on this here, we see volume rallying up as we kind of rally up here with price. So we should break out higher. Stoke RSI here on the daily breaking out. Let's see here. Yeah. It looks like, let me see here. So there's your range right there. Your overall accumulation range. It's just step-in-step reaccumulation before it heads up higher. Yeah. And you can get a pretty easy target here. Pattern target. Or you can just go right here, just based on the height of this range. Right there. Basically, you're looking at the R2 pivot. Next kind of area is the next target there. This range is from that high to that low. And so that just gets you right up there, yeah. Right around 4.5699 based on the height of that the channel there. It's lower here. 2.554. 2.58. Yeah, so there's your low one right there. So you got ABC coming down here off that before rallying back up. Looks like a leading diagonal here, maybe 1, 2, 3, 4, 5. So 1, 2, if it is, that's a 1, 2 off there. Maybe give you a little bit better targets here. Yeah, so that R2 pivot becomes your wave 3. And your wave 5 up here about 5.164. Maybe give you a fifth wave target there. As always, your pattern targets are generally your wave 3 targets most often. And so, like I said, in this case, wave 3 is looking at that R2 pivot. Here on the daily, wave 5, minimum expected target of 5.164. So, yeah. There you go. Let's see here. Yeah. By the way, this won't be bearish divergence here. It was bearish divergence right here. Just so you guys are paying attention. And then it broke down. And so then you had lower lows here. And now it's rallying up. So you're looking at the swing highs here to the swing high here. So that's regular. So don't think this is bearish divergence right here. Bearish divergence was this area right here, which led to the drop. Okay? The street you live on is not named, so there's no KYC over there, Telltale. I've never heard that. That's pretty crazy. I like that. Let me see here real quick. Let me pull up some other things, guys. What's going on with oil, man? Oil may be topped out, guys. Maybe. Man, oh man. We'll see here. But locally, let me zoom in a bit. Whoops, 90 will do fine. I mean, it's possible that we're ended here at wave 4. I mean, you've got the setup potentially happening here. You got some kind of bullish divergence printing here on the 90-minute. You've well oversold with the RSI, Stoke RSI there. But your 4-hour, you've got bullish divergence on the 4-hour, but again, it's not reset. So this could potentially head a little bit lower here, maybe toward this S3 pivot at about 73.58. But you're getting there, and things start looking kind of crazy now. As far as is that it? If we zoom out to the daily we're oversold here with Stoke RSI, but not bottomed out. There's room still to go, and of course, on RSI here, we're only right there at 37.5. So we're bearish, but still have a long way to go before it potentially is oversold there. Importantly, is this right here, getting rejected in this area. And we tried to push up. We rejected the pivot, gapped down, pushed back up, rejected around the swing low here, heading back down. So you've got this this daily supply block right here, kind of keeping things in check. And now coming down here, you've got this daily supply block here as well. So if we get a rally up through there, it doesn't mean that the price has to get rejected here, but it's probably going to find some resistance in this area. Got it right here, support right there. Looking on a breakdown through this swing low here, it's 74.96. I think could maybe set it down there. Here's the thing. Remember, this has been the rally off that May 20, negative 42 low there. And so potentially what we've got here is a 1, 2, 3, 4, right? So 3, 4, and then 1, 2, 3, 4, 5 here is as some sort of ending diagonal. And if that's the top, that means we've got low prices coming in, much lower prices coming in, right? Wave 4 is down here. Generally, we look for wave 4 as a target, as a first target, so that would get us mid-30s. Okay? So definitely something I'm watching at the moment. And this is especially important to watch because if that dollar continues to have the strength it does and you get oil dropping off, that means your USD CAD is going to be a fantastic long because you're getting support for the dollar and resistance for the CAD itself with the oil prices. Man, it's a huge bit of probably good route. I might be back into USD CAD again for the big moves if something like that happens. But right now, we're still seeing, right now, as you can see, we're just finding support on this previous resistance right here. So if we break down in through that, that starts opening up the case that maybe this is like a 1, 2, and we're heading down further. And if that's the case, then we'll be looking at a count more like this. So this would be almost expected to be wave 3 here around 74. Gives you a wave 5 at around 71.5, which puts you at the top of this range. This previous range here, this July 19 through 23rd of September, so about 2-month range here. Get you to there. So you get a bounce up and then you break down below that range possibly. All depends on what happens here locally right now. So yeah. Yeah, I just use standard settings for the pivot. Yeah, I just go in there. You can click on the thing, bring up the pivots, and just do standard pivots. Yeah. Let me see here. Here we go. Let's see here. Silver. What are we looking at here? Silver finally starting to show some breaking down here. Finally, we were looking at possibly getting up here around the 61.8 or at least to this high volume node, but looking like we might be finally coming down here. And so what we're looking for is a breakdown. This is the H4 pivot right here at about 23.82. That'll be gone after today. So still looking at this daily pivot. If we can get an impulsive breakdown through that carries it below this swing low here at 23.045. I think that's an A, B, and that would be a C. 1, 2, 3, 4, 5 maybe. So dropping down below that should then be, okay, wave 3 headed down on silver at that point. Gold's pretty much the same thing, sitting up there. Just looking for that breakdown to happen with it as well. Bianca, good to see you checking in. You're incredibly early for next week's stream. That's it. That's crazy, Telltale, about your street, man. What's going on, Tell You Rider? Good to see you checking in right before I'm gone, man. Samov, guys, I hope I didn't mess up your name. Good to see you checking in here. Would I mind charting Alice USD? Sure. Actually, I've just done that for Discord recently, I believe. Because isn't that my neighbor Alice or something, some weird kind of coin name? Yeah, that's what I got. It looks good. We have this range here. We have dip down below. We have volume dropping off, volume picking up on the move back up. Large volume, large candle spread on the breakout of the bull flag here, the descending channel resistance. We've pulled back to test it as support, so just look for a rally back up off it. Pattern target, based on the height of this channel here, is $20.81. But I've got a wave 3, minimum wave 3 up here at 28.36, and larger wave circle 3 up there, Roman numeral 3 at 41.53. But as far as, and that's just that local range right there, but this whole range itself looks good. We've got volume just dropping off from this range here, as you can see, and it starts picking up here as it heads back up. So, again, looks like we'll do pretty good there. I mean, I would expect, if wave 3 is up here, wave 4 is going to be the top of the range, and then wave 5 will pick up a bit. But wave 3 might actually push up higher. So we'll just have to see how it plays out. And that'll affect this wave 3 target here. It'll probably end up going higher overall, but looks pretty good at the moment. Found support around the daily pivot here and just kind of get ready to rally above the previous swing high at the R1 pivot. I mean, that's classic, bullishness right there. So we'll see that take up. Let's see here. Let's jump on back over here to Bitcoin. Finally getting that pullback we're looking for, maybe. So, again, 1, 2, 3, 4, 1, 2, 3, 4, 5 probably. Looking for a pullback down here around 57,000, 56,7, right around that area at this demand structure here. And then we look for a rally back off that. If we can get that, let's see here, off the top of that. I mean, look at that. That gets you a wave 2 just about at that descending channel resistance. Again, normally with channels, we'll look for a wave 1 up to the resistance, pull back for a wave 2, and then wave 3 is the one that actually breaks through. So this kind of thing doesn't surprise me. Maybe get a little bit further back there, gives a little bit more room. By the way, that is the S1 pivot here that we'd find that target around, up there around 62, 200, 62, 300 kind of area for that. So get that 1 up there, pull back for 2 and 3 on the breakout. And then you have that target of, pattern target of 69, 49.5 above the point of breakout. So there we go, guys. My voice is going. I can feel this. You guys can maybe hear it a little bit. So I'm going to go ahead and get out of here. I hope you guys have a fantastic weekend. We'd love to welcome you. If you're not already a part of what we do here, we'd love to welcome you, whether it's for a month or longer, whatever you guys want. We're here to shove as much education and knowledge down your throat as possible while you're there. So, it's a real friendly place. A lot of great people in there. Tell You Rider, great 6 minutes, man. Yeah. But I hope you guys have an absolutely fantastic weekend. Honestly, guys, listen, at the end of the day, trading should not define your life, okay? At the end of the day, trading is a means to an end. It's enjoyable. It can be an enjoyable means if you do it right. But at the end of the day, it really is just a means to the end. And what do I mean by that is your days should be concentrating on spending time with family and loved ones and friends and stuff like that. Because as I often say, you're never going to talk to somebody in their deathbed who's going to say, man, I should have spent more time looking at the charts. It's all about those memories as you get older, guys. I'm getting older, I know. Nearing 50. God, I can't believe that. It's crazy. It doesn't seem like I'm that old. But, you know, and the one thing I've noticed is as I've gotten older like this, the time that I spend with people that mean something to me are what it's all about. And if I can help any of you understand that a little bit more at a younger age so that you do spend more time with the people that you love as you're getting to my age, I'm going to try and do it. It really is, guys. Trading is just a means to an end. More freedom. More time, more money is more freedom. Okay? So always, always, always keep that in mind. If you're in Discord, I'll see you guys here in a bit. If not, hopefully you guys will join. But even if you don't, of course, I'll see you guys next Tuesday at 11 a.m. Central Standard Time. Same place, all right? I hope you guys have an amazing weekend. Take care. And we will see you then. Like I said, the only thing you control in the market is how much you lose, right? That's it. Take care.